Okay, we're getting ready to begin. Thank you so much for joining me. It's a pleasure to have you here. And make sure the phones are turned up. Let's see if we could pipe in some music while we do this. Having a little trouble here. All right, that's more like it. Oh, yeah. I think it's time to get on the screen. Hey there. Thank you so much for joining me. I almost said happy Friday. Happy Thursday. I'm Mitch Goldberg. You know, if it's 4:30, it's time for your post-market show about the stock market, investing, financial news, personal finance, financial planning, and overall taking control of your money. That's why I call the show Be the Boss of Your Money. Today's big topic is investing in women. Is it a solid strategy? Should it matter? That's what we're going to talk about. And we're going to look at some of the avenues you could take to invest in companies that promote women to the top. So we're going to roll a quick intro. We're going to get into it. If you have any questions, please ask me in the comments. I love hearing from you. And while you're watching it, if you'd like to give it a thumbs up or a heart reaction or an applause reaction, or celebrate, depending on what platform you are watching from, go right ahead and I'll see you out there. And now it's time for the big intro. Fix a couple of things. Okay, the vagaries of going live is you don't see all the things that I see going on in the background with the introduction and all that. But it's great to be here, and it's great to have you, and it's just a wonderful feeling. I see Sue is out there. Hey, Sue, thank you so much for joining me. I hope you are feeling well. I hope Fred is feeling well. It looks like he is making a fabulous and strong recovery from bypass surgery. So congratulations for that. All right, it's worth applause, definitely. So we've got a couple of things to go over. First, I'll take you through a quick overview of today's market action. It was a bit of a slow day after a really big bounce back from a miserable week and a half. And now markets are just kind of marking time, digesting what they wanted. Well, what are they? Markets digesting a lot of volatility in the last 2 weeks. It started the Friday after Thanksgiving when the Dow is down 900 points. Then we get a recovery over the last couple of days. We saw this massive recovery, 2-day gigantic recovery, biggest recovery in over a year. After seeing the biggest losses in over a year. So what's going on? So the stock market's taking a bit of a pause, and now it has to decide where it wants to go. We're still right near all-time highs, although there are many, many individual stocks that have been obliterated. So let's just go back for a second, catch up if you haven't been watching the show. If you have, I have a new term for you, okay? If you haven't been watching the show, or if you have been watching the show, a new term. You know how I've been talking about the tech wreck for a long time, and that's when all of these stocks, SPACs and the work from home, stay at home stocks, I'm talking like the Zooms of the world, the Teladocs, the DoorDashes, stocks we talk about all the time here. They've gotten absolutely hammered, just crushed. Peloton is another example, just crushed. And, is it a tech wreck? What's it really called? It's called the spec wreck. The speculative companies, just a ton of companies doing well that weren't making money. There was just such a bull market in companies that were losing money. So we had what's called a spec wreck. It did not spread to the rest of the NASDAQ and the larger, more established NASDAQ stocks. We've got Apple, which just a few more dollars a share higher, it's going to hit a $3 trillion market cap. Think about that. A company worth $3 trillion. That would make it the fourth or fifth biggest economy in the world. It's not a state. It's not a region. It's not a economic zone. It's a company, a private company that's just so close to hitting that $3 trillion valuation. It is an economic miracle. In any event, let's talk about a couple things. I want to take you through the day's action. All right. So we talked about Apple. We're going to look at a few other things. Weekly jobless claims came out today, and they hit the lowest level. These are people, first-time filers for unemployment. The lowest level in over 50 years, under 200,000. That is like blow away crazy number, and it does go to show you how strong the labor market is. And for people who saw last week, the payroll figures came in lower than expected. Keep in mind that these are subject to revisions. When you get a number that's way higher than expected, usually get a revision down. When you get a number that's much lower than expected, you get a revision up. And the revisions have added about a million. Yeah, the revisions have added so far this year. Over about a million jobs were created this year, more than we thought. So it's a hell of a job market. Jobless claims, lowest in 50 years. I think it's like the lowest ever. So it's really just a remarkable number. Tomorrow is a big number. We get tomorrow is a big number. We get the CPI, the Consumer Price Index figures. So this is the big inflationary number that we watch. It could be as high as 7% on the raw number. The raw number includes food and energy, and then you get the core number excluding food and energy, which should be a lot lower. But we are braced for this. We are expecting a big number. A big number would not surprise anybody. Even if it's higher than that, I don't think it would be a big surprise. It just means that the Fed has focused. The Fed has two mandates: the Federal Reserve, the main central bank of the United States. It has a dual mandate. One is price stability. People say its mandate is inflation. Its mandate is price stability. It could be deflation, fighting deflation, or fighting inflation. And the other one is employment. The Fed has shifted its focus from boosting employment to fighting inflation. It's focusing on price stability. So if we get a big inflation number tomorrow, all it's going to mean is what we already know, that the Fed will advance its taper, will speed up its taper. We already know that. What we're really more concerned about is the Fed's interest rate policy. Right now, Wall Street is divided between 2 or 3 interest rate hikes next year, starting around May or June. So if we get 3, if we're expecting 3, not that big of a deal. If we're expecting 2, not that big of a deal. If it goes to like 4, then you're going to start to see another revaluation of the stock market. When I see revaluation, I mean a drop. But we're not there yet. And the Fed's own forecast doesn't show any rate increases until 2023, by the way. So we can't really go by that. Okay. So, and while you're watching this, if you have any questions, words of wisdom, Josh is out there and he says, just FYI, your Facebook feed isn't working. Dang, that really sucks. Thank you very much, because I count on putting these on Facebook, so I have like a permanent store of the video. I also keep the MP4 file, but I like having it on Facebook. But all right, it's one show. So let's take it to the tape. Okay, let me get rid of that the social media banners that we're looking at. Okay, that's better. I'm going to make this a little bigger. All right, let's roll that. So let's look at U.S. markets first, okay? So the Dow is flat. I mean, it was off 0.06, big deal. Basically as flat as you'll ever see. NASDAQ was off a lot, almost 2%. That's a big deal. 0.5% gets my attention. Over 1% up or down, I want to know why. This is almost 2%. So NASDAQ stocks continue to get hit. NASDAQ stocks continue to be a source of funds to get into the economic reopening, economically cyclical kind of companies, companies that could benefit from inflation. The S&P is in the middle, down 0.72. Gold off a little. If you're an inflation hawk, you would expect gold to be way higher than it is now. It's been stuck in the 1700s, low 1800s. It seems forever. Oil is down. Why is oil down? I mean, yesterday we have all the saber rattling with Russia, and that could impact the global energy market. But oil just does not catch a bid. It's a supply and demand issue. So if you have all the demand, why is it down? You can't tell me it's just because of COVID and lockdowns, right? The new Omicron variant. I think we get through that. Look, I'm not a scientist. You never know, but we're not going into lockdowns again. The public is not going to tolerate it. Uh, we have more people vaxxed than ever. People are getting the boosters. We're going to have a new vaccine soon because mRNA vaccines are like plug and play. You take whatever the genetic makeup of a virus and you plug it into like the template of the vaccine, and you've got your new vaccine. Okay. Let me just get rid of that news there. So U.S. 10-year Treasury stays under 1.5%. The VIX. Let's talk about the VIX. The VIX here was up a little. It wasn't a particularly big down day, but the VIX is up 8.5% because NASDAQ was down. I want to see the VIX stay under 20 and keep the rally going. If it's above 20, the rally peters out. We saw it go into the 30s about a week ago, and then it came back down to under 20, and that was a record move from like the mid 30s to under 20. That was actually a record. If you wanted to know, if you weren't paying attention to the people in the back, Russell 2000 was off a lot, down 2%. That is a big move, down 51 on the Russ. That's the Russ 2K. That's the small cap index. The other indexes I follow, but if I follow the NASDAQ, I don't really feel like I need to follow the NASDAQ 100 or the NYSE composite. So that's this NYSE over here. But the Russ 2K down over 2.25%. So small cap stocks really took a hit. I want to show you some crypto because crypto had like a pretty crappy day. We've got a few people out there. I know I'm bouncing around, but I'm in a bounce around mood. Josh, you're still watching. So am I coming out okay now in YouTube? Because I did, when I go live, I pick the destinations. YouTube is a destination, Facebook, LinkedIn. Third day ever that I'm streaming to Twitter, by the way. So we'll see how that goes. So let me know, Josh. Thank you. Filippo, slam. You're starting to get bearish again. Yeah, listen, I got bearish and I'm still bearish. But hey, you never know. We're still going to manage our money appropriately for every client based on their personal finance anyway. Mother of Mercy, Philly says, by the way, if you know Filippo, you like I do, you call him Philly. These hedge funds can pin a price forever to get their entry. And then when it's time, they will send it up. We'll see. We'll see. I think maybe in the smaller areas, possibly there's more room for that. Russell dead money for a long time. The Russell 2000. That's what we're just talking about. The small cap index. Yes, correct. I do think it's a place for 2022, though. We spoke about that yesterday's live stream. So I gave you all the winners in 2022. I gave them to you yesterday. Well, I told you where I think there could be opportunities that haven't performed yet. So I can't guarantee that they're winners. I mean, I can't say that, So take that with a full disclaimer, okay? I have a lot of small mid cap slammed. Oh yeah, listen, small cap, mid cap. If you're an individual stock investor, this has been a brutal year, and that's why people see the market up. Oh, the S&P's up over 20%. Oh, it was a good year. There are so many people who were having a really bad year this year in the market. It's been a tough year for the individual stock picker, especially people who are making a lot of money and who are going for growth. You're like, I want to go for growth. Growth got slammed. It's just the way it is. I'm not knocking it. It just, growth specs got hit. Not that everything is growth in a spec, okay? Hedge fund comment is about gold. Okay. Gold. Okay, I got you. Thank you for clearing that up. And love it, man. Great show. See you in 2022. I can't wait to see you, man. I can't wait to see you in person and, Keep up the working out. I just got a functional trainer, by the way. Pumped about that. Pumped. You get it? No, it's a weightlifting machine. No, but I'm pumped. Like no pun intended. You get it? Pumped. Weightlifting. You know, you get a okay. Hold on. Okay. So let's look at crypto. Crypto got slammed. Crypto is down 5%. We thought that was going to get over 50, maybe, right? Like, it got slammed over the weekend down to like 42,000. Did it go lower than that? I don't. Maybe it hit 38. I forget, but I know it did hit 42,000. It lost like 20%. It was a flash crash, and that happens. And not surprising on a weekend, by the way, because unlike the stock market, crypto trades 24 hours a day, 7 days a week. So Bitcoin got slammed over the weekend, probably lighter volume, had a nice rebound, off though another 5% today. And let's take a look at the Doge. I always look at the Doge. I don't know why, but Doge is down to 17 cents. That went to above 70 cents when Elon Musk touted it. And that's why I don't like when people like Elon Musk tout something, because people who might not be that sophisticated see him getting behind something, so they think, oh, it's got to be a sure thing. If Elon's behind it, I've got to get into this. And people who don't have the sophistication or wherewithal or finances to take that kind of risk could get burned. And that's why, like, I know as a financial advisor, I have to follow rules in terms of what I can and cannot say. But I think if you have a very big soapbox or you have a very bright spotlight on you, you really need to be careful about what you say, especially in a thinly traded, extraordinarily speculative thing like Dogecoin. Okay, so let's get back into a couple of things. All right, I want to talk to you about the main topic today: women. So investing in women. I'm going to share with you some stats. Okay, there are now 23 of the 500 S&P 500 companies with a female CEO. Doesn't sound like a lot, 23 out of 500, but that's a new high, and that trend is definitely going up and expected to continue to climb, and it's expected to actually accelerate. Last year, out of the women who were as CEOs, last year, out of the women who were CEOs of S&P 500 companies, one was of color, and now 6 are of color. And of the Fortune 500 companies, 40 are CEOs. Back to the S&P 500. By the way, the S&P 500 is an index. You can't invest directly into an index, but you could invest in a security that tracks or mimics an index. Okay. But of the 23 S&P 500 companies that have a female CEO, listen to the names. Okay. These are going to be very familiar to you: Walgreens, CVS, General Motors, Citigroup. That's the first time a woman is a CEO of a major Wall Street bank. UPS, Best Buy, Kohl's, Oracle, and General Dynamics, which is one of the biggest defense contractors in the whole world. Okay, so these are major companies that women are now the CEO for. So get the mic exactly the way I want it. Okay, so that is that. Now, not all are big, well-known companies. Part of the spec rec, that we were talking about before, of companies that are women-led. And now you're going to think like I'm picking on women, and let me have a little drink here. I'm not. Listen, I promise you I always give it to you straight here, okay? But Rent the Runway got crushed. We'll put that one up. Okay. Rent the Runway hit a 52-week low today. All right. 24 high down to it touched $9 and change, I guess, earlier today, but that was a disaster. They came out with numbers last night after the close. Uh, Sales were up, but they're not getting enough new subscriptions, and the reason given is that there are not enough events, even though we're mostly through the pandemic as far as lockdowns go. Um, they're very event driven. So when women go to events, charity events, networking events, what have you, they go to weddings. They go to Rent the Runway, right? That's the reason for that. Another one is Stitch Fix. And this still is confounding. Stitch Fix hit a year low today, before bouncing a dollar, but it's down to 18 from 113 to 20. That is just a disaster. It's like an $11 stock going down to 2, right? But founded by females, founded company. It's a great concept. I've used Stitch Fix. I've bought stuff from them, but as people start to go out into the stores again, maybe they don't order as much from Stitch Fix. That's but all of the work from home, stay at home stocks got crushed, whether or not they were managed by a male or female. But I'm just giving you the entrepreneurial names, and some of these are just, they didn't all do well, and they're not all big companies. Another one is Pagerduty, which is a great company, high tech company, down from 58. That stock is down on the year. I think it's down 13%. Okay, down 15% on the year. All right. So, but there are a lot of female founded companies out there, and as these companies grow, they're more female leaders emerge, more females get promoted to leadership positions, and it's not just females who are CEOs of big companies, of S&P 500 or Fortune 500 companies. There are more women on boards today, in management positions, in finance positions. So this is a very big trend. All right. So how do we invest in them, and what are the returns like? I've looked at 3 exchange traded funds that focus on women investing. Okay. One, the ticker symbol is SHE. What I did is did some research. Okay, see, now I go to screen 4, and it freezes up on me. So these are the vagaries with going live. I have a feeling one of these days I'm going to be in for some new video gear. Which, if you know me, video gear is any excuse for me to get some new video gear. Like, my wife is like, "What? You got another bleeping camera? You got another mixing board? Really?" Yeah. But look how good this looks. Look at how professional and how clear I'm coming out to you, and listen to how smooth my voice is. Like, I could do like a jazz radio. You're listening to Mitch Goldberg, WGOLD. Oh yeah. Okay. Did that just want to make you vomit right now? Natalie, did that make you want to vomit? Natalie is my editor and producer. How's that? I've promoted you. Okay. So I'm going to take a look at SHE. SHE is an ETF, and its companies include United Health, Salesforce, Netflix, Visa, Disney, Intuit, PayPal, Nike, Shopify, and Merck. By any stretch, these are great companies, not necessarily with a woman at the top, but women in the boardroom at the top in executive positions. It's 35% technology. By the way, that is a consistent theme in the ESG world, which is where these female-focused exchange-traded funds reside. ESG, that means environmental, social, and governance. And that typically that sector is typically heavy on technology, which is why ESG has been doing pretty well, because you see how a lot of the big tech stocks have done. Although the biggest ETF that I follow is let me see, I have it up here. It's ESGV. It's the ESG. It's the Vanguard fund. We're back with the screen share. Okay. The ESGV, the Vanguard ESG US stock ETF. All right. Let me just scroll down here. Rock bottom expense ratio 0.09. It's up 23% year to date. How'd the S&P 500 do year to date? I think the S&P 500 is doing a little better. Let's just take a look at. We'll compare apples to apples. So we'll look at the Vanguard ETF, and that one that tracks the S&P 500, and that's up just about 24.75%. Okay, and then we're going to look at She. So this is what I was looking at. She has. Let me make this bigger so y'all can see it a little bit better. All right. This fund is, see, that's what it's in. United Health, Salesforce, Netflix, Visa, Disney. Disney has really tanked lately. Visa's come down a lot. PayPal has tanked lately. Merck has come down. Shopify. So you in Netflix, you could see why it's not. This is not doing that great. And so how is it doing? Let's just put She on the screen. How is She doing? Symbol is She. You get it? She. How's she doing? Okay. She is not doing as well as the S&P. It's up only 13% year to date. So does that mean you should not invest in an ETF that focuses on companies that promote women to leadership positions? No, it's really a matter of your values. It's a matter of putting your personal into your personal finance. But I want to take a look at another one. The symbol is WOMN, the Impact Shares YWCA Women's Empowerment ETF. Let's scroll down. If I'm making you nauseous because I'm scrolling down, just don't look too closely while I scroll down. Okay, but this one has NVIDIA, Apple, Microsoft, Amazon, Meta. Meta is Facebook, Adobe, Alphabet, Salesforce, and Accenture. By the way, Alphabet is Google. This is a lot closer to the S&P 500, which is why you're going to see that this fund is doing better than the one that sticker symbol is She. Okay, so like the real world, not everything is considered the same. Not all ESG funds are created equal. This is up 23%. Not doing quite as well as the S&P, but doing a hell of a lot better than the one we just went over before. And I'll go over one more. This one, the symbol is WIL, Barclays Women's Leadership Exchange Traded Note. It's similar to an ETF. It trades on the exchanges. And this one, by the way, one of the reason for the lower performance is these have higher, these have expense ratios. That hurts a little bit. But this one here, I want to show you what this one is in. Okay, I know I'm making you nauseous with my scrolling. Just turn your head away for a second. I'll let you know when I'm there. Weird. I didn't see it. Because I was looking at the wrong screen. Sorry about that. It's not giving me the names of the companies in it. I think it's because this doesn't trade on a U.S. exchange is what I think. But let's take a look at how it did for the year, because it's worth taking a look. We'll get more over here. This one is really backed off from its year high. It's up 22%. Okay, so not a terrible return. All right, there's no news for this. Let's see if it gives us something in the profile. This is the Barclays, from Barclays. It's just not traded in the U.S., so that's why it's not showing that. Okay. So just want to share with you. So the bottom line is having a portfolio, and we looked at two of the bigger ETFs that focus on women-led companies. It's debatable if that from a purely, and I looked at the 5-year comparison to the S&P 500 too, and the gap was even bigger between these funds and the S&P 500. The S&P 500, the S&P 500 knocked it out of the ballpark compared to these funds. The S&P 500 outperformed by a lot over these funds. But it's really like everything else. It's a personal decision. But it's really like everything else. It's a personal decision. ESG is not necessarily, investing in ESG funds is not necessarily about going after the best returns. It's about investing in a way that's acceptable to you, that in a way that holds a special place for you in the world. And maybe you feel you don't want to support companies that don't align with your values, and if enough people align with your values and invest based on that, maybe you'll have an impact on the way the corporate world works. And for some of you, maybe you want to invest in individual stocks because you want to invest in companies that reflect your values. For example, you might not have charitable proclivities at the moment, just for cash flow, or you're young getting started, but at least you can invest in companies that do share your values and shop shop from companies, buy things from companies that share your values. So in a way, you are making your contribution to a space in society that is important to you. So there you go. That's my story. I'm ending with it. Ending with that. I'm sticking to it. ESG investing, whether if it's investing in women, environment, social governance, it's really a matter of personal preference. And if you're just into the raw numbers and none of this matters to you, that's where I think the S&P 500 comes into play. If these things do matter to you, then there are a ton of ESG types of investments to choose from to better reflect your values. And if you'd like to talk more about that with me on a one-on-one basis, let me know, and we can begin putting some money to work, and we could begin building a portfolio that is reflective of what's important to you. Thank you so much for watching. It's Thursday, so I'm not going to do the live stream tomorrow on Friday. I'll be back Monday, unless something crazy happens in the market tomorrow rather. And that's about it. Have a great rest of the evening.